Daniela, and I can start the...
I started. It's going to take just a couple of seconds, and you should be ready to go.
Beautiful.
Go ahead.
Yeah. So 2 things before we start. Welcome. Well, maybe 3 things. One is the Hyperledger antitrust. It is Linux Foundation antitrust policy. You have to obey that wherever you are logging in from. Second is the code of conduct. So basically, it means that we should not be disagreeable even when we are disagreeing, or respect the speaker, respect the time of others. The third thing is, of course, welcome Saket Saket Sinha, Global VP, FSS Blockchain, who's in the thick of things, obviously, as the Global VP who's representing IBM on most of these interesting topics, especially CBDCs, because governments trust big companies like IBM, and I am sure he'll have a lot of interesting things to tell us about the operationalizing of CBDCs. Thank you, and over to you, Saket.
Thank you, Vipin. Good morning, everyone. This is Saket Sinha here. I work for IBM. I lead FSS blockchain solution. Today's topic is about central bank digital currencies. And all of us in our lifetime, we are seeing a remarkable development, innovation, you name it, anything, right? Completely transform the way we will experience financial services going forward in future. We are seeing a change happen, a transformative change happen across our society, our industries, our government, the way we come to appreciate money, and the way the color of money, or even the form of money, is changing right in front of our eyes. We have been fortunate from IBM, I personally, myself, in many cases, that we are in the forefront of seeing this transformative change, and in many cases directly involved with multiple banks and central banks across the globe as they are contemplating to see how to absorb and consume this plethora of change and innovation that is coming from all facets of technology as well as the society. We have, and for many of you who have been close to blockchain and cryptocurrencies and central bank digital currencies, stable coins, there has been a lot of, I would say, newsworthy items, optics, noise for the last so many years, right, in the name of digital currencies. And it is only now that we are seeing that some facets of digital currencies taking final shape in terms of how they will be launched and how they will start transforming the inherent financial infrastructure within the countries where they are being launched. There are many reasons for central banks to play this kind of notice to this technology. As we all know, a new form of currency, rapidly getting value attached with it, definitely has a huge impact on the economies of the country, as well as the seigniorage, as well as the fiduciary responsibility of central bank. What we are going to do today through a small presentation here is talk about the challenges and risks that central banks are facing, the decision-making criteria that they're going through in terms of putting up a structure to operationalize central bank digital currencies. Believe me, it's not just a technology challenge. More so than the technology, the challenges are on the model in which these digital currencies can be launched and issued, as well as operationalizing them from a business perspective, technology perspective, and of course the operational run perspective. And the considerations are real and serious because there's no stepping back. Once you move in a direction, and you allow a section of your economy to transact and get dependent on this, decisions you make today will have far-bearing consequences down the path. And so everybody is careful. Yes, there are a lot of cool things that can happen here, but at the same time, there are a lot of uncool things that can go wrong, for which many central banks are paying special attention. So we have many central banks who are watching, many central banks who are thinking, and some central banks that are forging ahead. But they're forging in a very calculated manner. They're forging in a way that they are touching it, experiencing it, as well as understanding the implications, deliberating the decisions, so that in their goodwill and faith, they are trying to make all the right decisions, so that tomorrow they don't have to pay the price of blunder. So what this presentation is going to talk to you about is basically very briefly talk what's happening with central bank digital currencies, and then we'll straight away dive into some business technology and operational considerations as we see them. And later we'll have open floor for some question and answers that you can ask me directly. I'm not deliberately using any names of any central bank here. So these are extracted information based on my own personal experience and discussions that I have been having with, and my team has been having with central banks. So you'll not see any name. I might refer them verbally where we are allowed to, but believe me, there are many central banks out there doing work and progressing this, but they're not yet open in the market in terms of an announcement or anything of that sort. But let's dive into it very quickly. As many of you know, with the amount of news coming out, right, our industry, financial service industry, has truly reached an inflection point. We know that even in US perspective, OCC has allowed financial institutions to become digital custodians, for example, and issue their own stable coin and use public blockchain network for financial services. That's a huge position from where we were just a year back, right? And that is opening up a Pandora box, I would say, in terms of every financial institution worth its name trying to understand how they will leverage or how they will be impacted by the onset of digital currencies and cryptocurrencies in the market. At the same time, since the advent of blockchain, the banking industry has not been silent. They have been doing proof of concept pilots, projects, each pilot project proving a point in terms of how blockchain technology can be used. And that's why we say we are at an inflection point, because we are seeing a change happen. And this change is not only for experiment, this change is for grabbing the landscape in terms of opportunities as well as market share for the competitive advantage. What we are also seeing, especially in the capital market, that the entire capital market infrastructure is getting upended in terms of, with the use of blockchain. It's almost like a new internet or a new underpinning fabric of technology will drive the capital market functioning. Who will survive, who will get disintermediated, and how the market infrastructure will get replumbed, I would say, as time will tell. But that's where everybody's mind is headed to in terms of how they are seeing the change hit them and trying to accommodate those change in their own cycle of innovation. What's changing rapidly? Just between last year and this year, never in the history, I think we have seen such a dramatic impact of something appreciate in value, especially cryptos. We are at around 2 trillion of valuation and market size of the cryptos. But it's not about the appreciation of value of the crypto itself, right? It is the derivatives that gets formed in the capital market that is truly driving the attention. 2 trillion, for example, is the net value, but people who have accumulated that value, the entire derivative around that in terms of how that value how you can create liquidity for that value, how you can borrow against that, how you can lend against that, how you can stake to earn interest. All of those things are creating the secondary market, the derivatives market, and people are investing now very fast in terms of looking at how to extract value from this fast appreciating cryptos. An entirely new asset class has come up, as we all know. The biggest solution, as we see across our market, is in the form of digital custody. Many financial institutions are looking at ways of how they will have to provide or will provide a digital custodian solution. At the same time, solutions in terms of interoperating between different cryptos, exchange of values between different cryptos, using it as a payment mechanism, use it as a transaction mechanism is coming up. Decentralized finance, amount of value that is getting locked up in for enabling decentralized finance is increasing. And so it's giving birth to a new capital market infrastructure. The players are still there from a broker-dealer perspective, share transfer agents perspective, stock market performance perspective. But at the same time, many intermediaries are looking at ways of how they will remain relevant in the new system and not be disintermediated. It is upending traditional intermediaries as we speak, and this will have huge impact. It's a huge impact on the entire market stability, financial market stability, as well as the financial system that runs inside a country. And right now, the government as well as the central bank and the watchdogs had control and have control in terms of the financial systems, but it can be threatened. It can be threatened from a variety of perspective, from a attack perspective or from liquidity perspective, and that's where the mindsets are working from central bank perspective, how to safeguard the system that drives the brain power or the chunk of the economy. So why are central banks interested in CBDCs? We know about many of these that you would have read. I will not go into too much of the detail, but there are 4 major factors where the mindset is right now, and this is across multiple central banks that we interviewed and we discussed with them. Definitely, it's around currency issuance and management. If a central bank have to issue a digital currency, issuance and management is their fiduciary right, and that's something that they want to see how it will happen in the new digital world. The stability of the monetary and fiscal policies, of course, the second most important part. Payment clearinghouse. Many banks and many countries and central banks have invested huge amount of money to have something like real-time gross settlement systems for cross-border trade and others. In the advent of a digital currency, how would that impact those massive infrastructures that are out there? Whether you should leverage them, whether you should have a new way of cross-border payment and settlement, that has a huge impact on the entire payment infrastructure of the country. And of course, financial stability and the regulation. I would say that in terms of financial stability and regulation, that's again a responsibility of a central bank. But on the regulation side, things are still emerging. While many governments and central banks have defined policies and framework, but the basic tenets of those policy and framework has just touched the challenges that would originate in the issuance and management of central bank digital currency. Many policies are still being looked, many policies are still being discussed and drafted as we speak, and it will only become clearer when large-scale adoption of these kind of central bank digital currencies starts taking hold, and they will come forth. Because right now, most regulators are wondering in terms of what even those basic regulatory framework should look like to provide that level of control and level of accessibility to monitor this kind of mechanism going forward. And so we know that central bank digital currencies comes in 2 flavors, one in retail and one in wholesale. In our experience, as we touch multiple central bank, 90% of the central banks right now are focused on the wholesale side of central bank digital currencies, which is basically a scriptural money that a bunch of bank and a central bank can agree and create. It could be a stable coin as well, or any kind of a token-based money or anything that they can create to deal among themselves. And whereas in some central bank, they are interested and they are exploring the retail side of it, which is actually issuing a fiduciary money that can be used by everyone, including consumers, to do transactions. There are more challenges on the retail side than on the wholesale side. Most of the wholesale side examples that we are seeing involves, as I said, an aligned member of group of banks coming together and creating a mechanism through which they can do, for example, issuance of bond or, for example, settlement of securities and things like that. On the retail side, the biggest challenge is about the ability of the central bank to have full visibility of the retail digital bank central currency, and the distribution and issuance of those currency in terms of how it will be tracked, the anonymity, the privacy, and whole bunch of issues that are coming with that, which is posing its own challenges. We'll talk about these as we go into the discussion later on. What are the central banks aiming for in the perfect world, right? It's about sovereignty. We talked about that, regulatory standard, transparency, avoiding parallel economy. This is the biggest mind, I would say, share from their point of view, that they are worried about if adoption of these kind of mechanism, central bank digital currencies, retail or wholesale, would create or give birth to parallel economies, right, where fraud or black market or shrinkages of cash would lead to other kind of consequences that they are trying to investigate and understand. Of course, risk management, mitigation, and overall liquidity. Many times we know that availability of liquidity is good for the smooth functioning of the financial market. But if you have more liquidity, it also creates another set of problems in terms of leverage and in terms of derivatives that are based on those liquidity, which inflates the secondary market that you want to control, so that you don't get over leverage from that point of view. So those kind of things, and what kind of constructs are needed to manage liquidity and the fluidness of those liquidity is under consideration as we talk about. From a blockchain perspective, the gravitation toward blockchain as a technology was a perfect example for central banks to consider them, just because with blockchain, the three fundamental things that becomes inevitable and becomes available is about the truth, trust, and transparency of the available informations, transactions, data, and things like that, the immutability and the finality of transactions and others. So it was natural for central bank, as digital currency is coming up on blockchain. I mean, the motivation with blockchain and exploration of this technology for issuance of CBDCs, in all the four key criteria on currency issue management, monetary stability, payment clearinghouse, financial stability, and regulations, they are looking at the use of this technology from variety of perspective, where many central banks have set up sandboxes, for example, to test the regulatory framework and also the technology in terms of its performance, in terms of its usage. They are trying to bring them together and combine them with their existing payment infrastructure, which is sort of decentralized in operation, but centralized in terms of command and control. And they're trying to bring in the concept of blockchain within that context. And then, as central bank digital currencies take shape, if one type of currency takes shapes and one kind of value gets associated with that currency, there are others that can take shape as well. So how do we allow settlement? How do we allow interoperability? How do we allow exchange of value? That's where atomic settlement type of examples are being used on blockchain. And then, of course, the digital currency issuance itself, like what protocol, what framework should we use to issue the digital currency? For an example, we are working with one central bank right now, and they have been going with a permission blockchain network for a long time, and have done project across multiple available DLTs, technology, and protocols. And they're gravitating toward using a more of a public blockchain network for a reason. And the reason is that they don't want to get involved in managing a private network, for example, from an infrastructure perspective. Something that is already readily available, they're thinking of using that as a readily available infrastructure. And then they are also looking at not investing and developing their own wallet or other kind of technologies. And they're looking at the industry and the ecosystem to come up with those solutions that would make it seamless. Any wallet or various types of competitive wallet that can exist there to allow for the transactions to happen. That was a change for us, because we thought central banks most probably will go with a private permissioned network so that they can have better control and better visibility and a better dependency in terms of ensuring the strength of the infrastructure and other things. But here is a central bank that is looking at a public blockchain network to leverage and utilize, and trying to investigate in terms of how they can safeguard the financial system that they will build on top of those kind of infrastructure. So in terms of current activities, as we see central banks across the globe doing work in this space, as I said, there are many in the discovery phase. They're still creating strategy and roadmap, discussion paper, call for experiments and things like that. There are many in experimental stage where they have built pilot sandboxes, and then there are some that are reaching, I would say, operational stage. Nobody has yet gone into full large-scale production. There are limited productions out there, or a limited proof of concept and pilots that are running in production, which the transactions is happening. But a large-scale, full-fledged deployment is still, is not there. But in each of these cases, right, whether they are in different phases of where they are in their journey, in discovery, experimental, or operational, there are a bunch of questions that they are asked, and the nature of the questions that they have changes based on where they are in their journey. But it's not easy. It's not easy to just build something and launch it and do it with a project plan of whatever 6 month, 9 month, 2 year kind of project plan. The nature of the questions are probing. They require dialogue. They require decisions and discussions among not only with the central bankers but the whole financial system, the government, as well as a lot depends on the political and the socio-economical makeup of the country and the central bank in question, and the relative importance that they view themselves as they are part of the global economy. So those questions shape in terms of how fast a central bank actually will move from a discovery stage to experiment to operational. What we are finding time and again is that while most central banks, I would say right now, are in the discovery kind of a phase, the questions that they have, and as this knowledge becomes pervasive in terms of what others have experienced, what others have made decision on, they are in the stage of getting into experiment. So this year and the year next, we will see more and more central banks announce or get into experiments with established framework for the joint development and innovation around the central bank digital currencies. What are central banks most worried about? And of all the things that are out there, this is just a net of things where we see most conversations happen, which is the first and foremost in regulatory policy and government risk and compliance gaps around tokenized clearing and settlement, digital asset custody, automated governance, risk and compliance, real-time payment, and financial crime. As I was mentioning earlier, many of these policies are still taking shape. They are not yet fully vetted. They are not even defined or not even contemplated in terms of what those policies might look like. It is coming slowly. Some are actively working on it. Some are watching others, what they are doing, and are a follower. But this is something that most central banks are first and foremost worried about. The second worry is on the technology side, which is around security of the infrastructure, real-time visibility, surveillance, cash flow forecasting, and the use of infrastructure, public and private network. Biggest question that has been asked around by central banks are that, hey, if my infrastructure is attacked and I have a huge portion of my transactions dependent on that, what happens? How do we protect against that? Natural disaster or war or anything of that sort, right? Or those kind of things that comes up in there. And then the fiduciary gap, central bank plays a role. So in that role, they want to make sure that they have enough of market consensus. The asset value that they're responsible for is always protected, and the economic threat that they will face from concentration and run on CBDCs, those can be avoided from an operational perspective. So these three are most challenging questions that central banks are worried about, and that's where I would say most of the think tank goes in. And the experiments that they call out or the pilots that they invite RFPs for, those are invariably trying to address some of these concerns and come to some decision point that they can either become a policy or they can become a part of the solution. Key stakeholders, if we look at central banks, so we know we have central bank, issuer, regulator, consumers, financial institutions, and identity providers. Today, for example, and why identity provider? Today, for example, if a bank issues a fiat currency and note, it doesn't need an identity there, right? The fiat currency itself is a guaranteed value to whatever extent guaranteed by the bank. In tomorrow's digital currency world, the value of credentials, value of identity is humongous in terms of both public and commercial entities to have that identity for their usage and for their participation in the currency. Central bank are not in the role of being an identity provider today. So tomorrow, whether they will be a third party or they will be a natural extension of a central bank acting as an identity provider or some other government or public or semi-public entity, that's again a big question that is being investigated as we work with this kind of solutions. But it is an important part, that credential, and it's not only about credential identifying who I am in the digital world, as we all know, it's about the private and public key management. So who would actually provide or perform that kind of key management and whose responsibility would it be and accountable for, whether it's a single entity or a combination of entity, that's something is again a discussion for the market and the consensus around in the market. Let's look at some key considerations. Again, here, what we will cover here are some top of the line things that have come up in recent conversation of past, I would say, 1.5 years or so. They will not cover the entire breadth and depth of, there are many considerations as such, but these are something that where we spend most of the time in terms of, and we are seeing banks spend most of the time in terms of answering. If you look at our experience and our visible experiences announced or knowledge in the market, we have built a solution, wholesale currency for interbank settlement in Middle East called Arbor currency between the governments of Saudi Arabia, United Arab Emirates. We are working with a large central bank in terms of creating a fiat-based stablecoin and running a variety of experiment on security settlement with that thing. We are working with a retail central bank digital currencies in terms of creating the policy and framework for issuance of retail central bank digital currencies in a particular market. And in a smaller capacity and other places, we are consulting with a lot of central banks in terms of the policy making and risk and compliance driven work around which the frameworks are defined and set up. The framework to even experiment with central bank digital currencies are being defined, the technology decisions being made, and participation decisions are being made, or who will participate in what capacity, those kind of things are being done. So we are very much thick and thin in the conversation, and that's what I'm bubbling up here for discussion and sharing with you. So if you look at business model considerations, the first thing that comes up is the account type. In terms of the central bank digital currency itself, whether they will be account based or token based. Of course, in most of the wholesale side of the central bank digital currency are account based, and that's an acceptable format that everyone would need to have an account, and there will be a account based central bank digital currencies. And the retail side, of course, there is a token based, but it is interchangeable. If you think of a solution a central bank is trying to launch where they are using both a cash side and an asset side use case, like a bond issuance with a cash issued by central bank digital currency or CBDC, then these account types would be interchangeable, and you need to factor in ability for for protocol to protocol or one protocol to different protocol interoperability between the exchange of values. It's not only about exchange of values, it's about exchange of consensus mechanism that would exist in different protocols. So that's one considerations that is coming up. Of course, some central banks have used one type of protocol to keep it simple for both account-based and token-based, whereas some are looking at different protocols to keep account-based on one protocol and token-based on another protocol. The distribution of a central bank digital currency. So if you think from a central bank perspective, if they are in the business of issuing the digital currency, what's the mechanism of that distribution? And we are looking at different types of model. In few cases, central banks are thinking about issuing it themselves, but at least in experimental stages. In other cases, they are working with market participants to have a licensed FI or commercial bank issue this CBDCs, where a central bank will provide the fiduciary and oversight in terms of managing what they can issue and how much they can issue and in what format they can issue. So there's a two-tier model in which a central bank then allows a licensed FI, commercial bank to issue. Those will go to individuals and corporates, and where the transactions and use cases will be enabled. Or in some cases, central banks are looking at directly issuing those currencies to facilitate transactions and facilitate transfer. The key question here from a central bank perspective is that since, of course, they are in the business of issuing paper-based money and managing that entire operation from a seigniorage and other kind of factors, but in the management of a digital currency, there are added implications of security infrastructure and technology and operation. And that's something that central banks today are not geared from design principle of managing and being a technology infrastructure managed and operation. So third party will have to be involved, and how would that third party be controlled and licensed and monitored is again a big question and deliberation that's happening in central bank. The other question comes about is on the coverage side. As CBDCs, it will be accessible to different set of entities, including consumers and businesses and others. How would anonymity be maintained in that, right? The principle of cash transactions is that if you have cash, there is a degree of anonymity in it, and they would like to have that level, same feature set available in the currency, in the digital currency itself. So zero knowledge proof protocol is a big thing that comes into discussion, so that level of anonymity similar to cash transaction can be maintained in the digital currency transaction. But again, there are deliberations and discussions here, right? There are deliberation discussions, for example, a central bank that is in the business of dropping helicopter money or creating stimulus or a fiscal package for reviving its economy would like to see if it is done using digital currency, for example, then the traceability of that, whether that fiscal stimulus really went to stimulate the economy or went to other non-productive purposes, and that kind of measurement and metrics they would like to understand and check. If you look at example in China, for example, the yuan-based currency that is being launched, each individual yuan there can be traced, right from the moment of its creation and right to the moment of its usage and consumption and burning and whatever. So the entire path can be traced. And that's powerful. That's powerful to understand how the money is being really used and oiling the economy, as well as whether it is for productive purposes or non-productive and nefarious purposes, things like that. But the level of coverage from an anonymity perspective is a big question that is being answered as we speak. Then the question comes about the privacy. Again, this is big part of the discussion itself. The privacy comes with a trade-off on performance. If you have too many privacy checks and technology to get into transaction graph or transaction detail, the trade-off is on the performance. And to what extent this privacy should be auditable to preserve the asset management or the asset itself, and having that level of scrutiny on the asset, right? That's something that is being discussed as well. Right from account level to transaction, whether it is one-to-one, one-to-many, peer-to-peer, or one-to-many to many. The audit part is something that central banks are deliberating in terms of to what level they would have that auditable feature enabled as in the solution as these things are launched in the market. The other one is on control. As we all know today, central banks are basically in the process of, they have the control in terms of how much money is being printed. Tomorrow, how much currency will be issued. Again, they would like to have that control to oversee system and set the CBDC supply and can up and lower the availability of that kind of currency for interacting with the economy and others. Again, the question here then becomes is that as these currencies are used in transactions, and again, from a derivative and leverage market, if leverage has been built on that, how would visibility be created to determine if there's an oversupply or undersupply? And would there be a policy in place to guard against some central banks going far ahead in terms of oversupplying and creating a lot of liquidity to show that the economy is humming and booming, whereas there could be a challenge of that. These are again, longer term conversations, and the value of that particular digital currency, even though it's backed by fiat, is it really backed by the fiat and based on the monetary policies of the country, or would that value depreciate, or it will also lead to depreciation of the fiat itself, as if there is an overrun on central bank digital currencies in the transaction. So that kind of control mechanism to establish, to provide the trust, to provide the level of confidence in central bank digital currencies, that's something is again part of big discussions with central banks. Last but not least, we have this social considerations in the business models, which is basically the stability of the value, the means of payment for and including financial inclusion within the country, consumer protection, the store of value, security and resource allocation, and bringing the overall level of trust in the integrity, financial stability, monetary policy, and effectiveness, right? So these are things that being part of the discussion as policies are being written to satisfy many of the social criteria as we speak here. The interaction of the business model is again another part that is coming up. If you look at central banks, digital currencies, there is a central bank, there FI bank, there non-banking financial institutions. You can't exclude them because they play an important role in your economy, and then there would be some exchanges. The interaction model is typically being discussed as we speak, is whether there should be only one financial institution that interacting with CBDCs, or one type of financial institutions, or the CBDCs available to banks and non-banking financial institutions only, or CBDCs available to entire economy to interact with it, right? The level of breadth in which the CBDCs will be made available, nobody has yet reached a conclusion that it should be made available to the entire economy. Everybody is guarded because they want to watch and see how these things pan out. So most 1 and 2 are the most obvious field of experiment as we speak now. But at some point of time, if these two succeed in a way from a policy and regulation perspective, then more and more aspects and sphere of economic activity will become part of it. Let's quickly look at some technology considerations. We'll take a look at ecosystem, decentralized credentials, and these are again the top bubbled up considerations where challenges and solutions are being worked on and discussed more and more as central banks are experimenting with or thinking about launching central bank digital currency. From an ecosystem participation, there is a general belief in central banks that primarily the role they will play will be similar to that of a fiat currency issuance and management. They will create policies, create the framework, and use public-private participation to then make this solution pervasive within the financial system. So as such, the framework that they are building, if you think about this from a central bank digital currencies, they are building a framework where the technology will provide the interface. Hold on one second. Technology will provide the interface for various applications to interact with the framework, various compliance platforms to interact with the framework, and then the entities in terms of bank, broker, custody, or you name it, broker, dealer, whoever is there will interact with the platform. So it will be kind of an open architecture, and this is something that has come, and it will only allow more and more participation. And if something is successful, then it will create a scale around which it can be very quickly expanded with external participation. So leading central banks, I would say, who are far ahead in terms of doing and building this kind of technology beyond experimentation, and now focusing on the architecture and to make that architecture open to allow for ecosystem participation. The rules of participation, the framework in which they will participate, the technology they will use, they're not dictating specific technology as say, but from a security and interaction point of view, they are defining those interaction mechanisms. But this is how the visualization in terms of different entities that would come into play will interact with the ecosystem and increase the participation as need be. The other one we talked initially is about the credentials. Really, how the credentials will actually work. We are working with some of our verified credentials running on Hyperledger Indy, for example, in some of the central bank digital currency conversations. It is very important aspect, as I was mentioning earlier. The need for credentials to be part of the system is important because every entity on blockchain would have that credential which is interacting with digital currency. So apart from a blockchain network, a payment network, you will need an identity network on the same chain or on a side chain, but where that credential information would be supreme in terms of how you will interact and how you will have the privilege and the rights, depending on what role you are going to play in the market infrastructure. The other important factor is interoperability. Interoperability not only from within the country's solution, like within different protocols or different blockchain networks that on which solutions are built, but also interoperability from cross-country, cross-border perspective, right? So if one region in certain of the world has built something on Ethereum, for example, other region has built something on Hyperledger, for example, and if you want to connect the economic corridor for trade, then what kind of interoperability will come in. Right now, majority of these are based on ERC20 interface using cross-chain atomic swap like HTLC support and a set of interop standards for non-crypto digital currencies are being developed in some cases as well. Here is an example of atomic swap between an Ethereum ledger and an asset Hyperledger ledger, and in terms of the mechanism in which these kind of value can be exchanged from a permission cash ledger and a permission asset ledger. But it's a work in progress. It's not something that has been fully baked. In limited capacity, these are working. The challenges where it's being discovered or I would say people are investing time and money and energy is on the scalability, the performance, the rollback feature, for example, and the translation of consensus mechanism of one protocol and with the other protocol to provide that level of uniqueness, the finality of the transaction as it happens between different protocols. So interoperability is a big thing, and most of the advanced central banks which are working on or have a prototype solution and participation, this is the next hurdle on which they are working to have a policy framework as well as technological considerations for or technology solutions for interoperability. And then there is integration. Earlier, we saw the picture of how a central bank will provide the framework architecture or define the framework and architecture in which solution will be built and market participants will interact. But the protocols around which those integration will happen, ranges from full mesh connectivity, access to common services, as well as access to the core banking system. The access to core banking system of banks is a new one, but it is coming up very fast as in a couple of large central banks as we are discussing and looking in those policies, where commercial banks' core banking systems would have a way in terms of interacting with the blockchain network itself. To such an extent that in one particular case, we were thinking about whether you really need the core of the core banking system, which is the general ledger, which every different banks or many different banks have their own general ledger and core banking system. Would that one day be part of or be used from a blockchain perspective, that you have the ledger on the blockchain itself, which will be a very transformative and revolutionary change from a bank perspective, because core banking infrastructure and payments infrastructure, as you know, consumes most of the technology cost. And so that shifts to a blockchain, then it will be far revolutionary and very appealing from a cost and efficiency management point of view. Another technology consideration that is discussed most often is the wallet. Some central banks are very particular that they will define the standard and framework for building the wallet, whereas others are looking at available wallets in the system. Most of them are, of course, based on Ethereum, but there are other wallets as well. All they will provide is rules and set of policies around which these wallets can become part of the ecosystem. But again, they would allow these kind of wallets to exist. We will need wallet for retail central bank digital currency. We may need wallet for wholesale as well. There's a less and less of usage of examples of a wholesale wallet, but on the retail side, since only 10% from our experience of central banks are using it, most of the discussions there are also the wallet and the wallet management. It's not only about the wallet management, but the private key and who will be fiduciarily responsible for this private key, whether you should give it ultimately to the consumers or there will be a way for consumers to recover a lost private key and other things. Those things are part of the discussion as well. Offline payment, many payments can happen on blockchain and will happen on blockchain network, but there will be different types of payments that today happens offline world, for example, and they will happen as well. And it's part of any economy, any process. So traditional techniques like electronic cash devices, store and forward, but all of those will need additional policies and regulations and legal enforcement to avoid fraud or other kinds of financial crime. A new technique that we are working with one of the central bank is basically developing a micropayment channel, which will require support from the main payment network using Lightning Network or like Bitcoin, for example, Bitcoin Lightning Network or others, even from Stellar. But that's an additional consideration that is coming up to support offline payments. And then on the privacy side, we have considerations to manage privacy. We talked about that in the business side, but on the technology side, things like private channels and subledgers as a means and mechanism to handle privacy, side chains where privacy credentials will be maintained in side chains to interact with the main blockchain network on which central bank digital currency is used. Zero knowledge proof, again, is a big requirement. And then Lightning Network or some kind of a two-layer protocol a network on which a participant can commit funds and exchange transaction peer-to-peer, those kind of things is again a part of experiment, I would say. So, but everybody recognizes the fact that you will have to have a solution to handle privacy. You can't bog down the main network and solution with a privacy protocol on it. So the question about whether you should have a sub channel or a side chain, things like that would come into play, and it's coming into play as we define the solutions. Let's look at some operational considerations. As central banks looking at it, right? They are from just pure operational perspective. We talked about a direct model where they will issue the currency themselves, maintain and manage the infrastructure. Indirect model, which is a participation with other commercial institutions, and there could be a hybrid model. Of all the central banks that we are working with in our universe, two of them I would say are looking at a hybrid model. And one of them is still in a direct model kind of a mode, but majority of them are in indirect model, right? Where the central bank will create the policy, they're facilitating the experiments and the working, but they will use the commercial bank infrastructure and their capability to manage the issuance and those kind of central bank, CBDCs currencies in there. From the overall operational perspective, if we look at ways in which things are going on as part of the policy writing, as part of the framework drafting and other things, majority of the efforts are being done on the intrinsic value of the currency itself. So whether if they issue new digital currency, for example, will it replace existing fiat? Or it will be in lieu of existing fiat. What happens there, right? You can't just create surplus, for example, or how will you back it up? What will be the impact on inflation? So exchange value of the fiat to currencies and other things, and how would you guarantee the intrinsic value and insurance for preserving intrinsic value? So these are tough policy questions on which things are being discussed and framed and written and debated, right? Many of these have political implications of the country itself. So they are part of, the financial ministry or the government discussions as well in terms of understanding. So the level of knowledge and the level of understanding, the depth is still maturing. And that's where the delay is mostly in terms of large scale adoption of central bank digital currencies. The purpose and adoption itself, many countries are still, I would say, who are in early stages are still watching others and trying to understand the purpose and adoption of why central bank digital currency. So there's something there, and they have to create a different kind of framework. Like many central banks, for example, don't even have framework for digitization or supporting digital document, digital signatures and things like that. And that's where the challenge is, because they are not in the process of completely embracing or understanding, and a lot of work is being done in that kind of policy framing. Identity and ownership, who will own the identity and ownership of credentials that come into the network. If third parties are owned, how can you protect that from being misused? If the account and token-based models are used, then the credentials of those accounts, who will own them and responsible for? A big question on architecture from the design point of view, the security point of view, and more important from the infrastructure point of view. So as you use that infrastructure, it's not only about whether you're using private infrastructure or public infrastructure. It's a question about resiliency, scalability, and availability, right? The big question out there is still the fact that if a technical challenge comes up into the existing blockchain network, how would it destabilize the important aspect of central bank digital currency and the transactions? Disaster recovery, and one big question that has started emerging is a fail-proof rollback capabilities. So would it be possible to roll back? Of course, you can fork a network and create other things, but imagine billions and billions of transactions happening, and the time it would take to go back and roll back transactions for a variety of reasons, and then create a new fork. I mean, there are significant technical challenges there itself to manage the architecture. And interoperability, we talked about that. It's not only about what you do in your own cocoon, it's about creating a system that can not only work within your country, but across country for cross-border and interaction and economic activities and participation and trade with other countries as well. And then there are considerations in terms of the security, technical and performance, regulatory and economic. And then again, these are part of work that we are doing actively. As we speak, and as I'm speaking here, we are helping them write these policies and framework and answer some of the tough questions, and what decisions to be taken. What's the decision-making criteria if something happens there, right? And then something goes wrong. How would you recover from that? It's not easy. It's not easy to completely anticipate what something will happen in future, but it is important aspect of consideration to write them and have that clarity and understanding for the ecosystem to trust that things, if it goes wrong, it can be recovered, or it can be brought back to normal. And that's where from variety of perspective, right, the credentials, the personal privacy, the impact on economy, all those things come into play as we speak and write these policies and expand on these policies. Many of the experiments that we are doing and proof of technology and proof of concept that we are doing, those are informing how these policies will become more mature, this regulatory framework will become more mature to support the expansion of these kind of concepts into the market. And there is a roadmap. We normally encourage central banks to follow a defined roadmap from a initial stage where they are looking at assessment, even beginning to delve into it. Many central banks, as I said, are still waiting and watching. But then there is so once you have done that and understand this is important aspect, you get into the deployment type of it, where you think about creating a framework of sandbox, test network, production network, those kind of a thing. Then application development, whether you do or you invite commercial vendors and other commercial entities to do to test the framework and infrastructure, and then on the operation side. So there is each phase, I would say, takes time. Each phase is a learning process. Each phase, most of the organizations are still between the first and the second phase, or touching on the third phase mostly, but many are still in the first phase itself. And if you have reached a phase of even operation, right, they would reach this phase of application development and testing some of the operational considerations as we speak. Sorry about that. I took a lot of time to cover that, but I thought I gave some of the key considerations as things are happening in the market and as with central bank digital currency. Let me open it up for question and answer and some dialogue and discussion. It was I hope it's not monotonous, and things in there.
Thank you, Saket, for this wonderful overview and, of course, drilling into some of the operational aspects. It's a lot of ground to cover in a short period of time, and you have done an excellent job. I have the feeling that there are a lot of questions, but with 3 minutes remaining, I would rather concentrate on, thanking you and having a pathway for a future interaction from this group. I mean, we can always ask questions right now, but I have a feeling that other people are also waiting to get to the next session, which is on the same Zoom channel. So if you have any closing words, that would be interesting. Plus, we can, if you can create a pathway for interaction, that would be also very interesting.
Sure.
Because
Sure, I think that's a. I didn't realize we were spending so much of time here, but I hope I provided the context and some of the considerations here. I can share this presentation if anybody wants to. That's number one. Reach me out on LinkedIn, and I can help connect there and share this, and ask me any questions that you think and you're encountering in your world. Right? As I said in the beginning, we are living through a transformation that we'll see only once in our lifetime. It's a great to be part of this, and really happy that the world is thinking and moving in the direction that is really transformative change, and will redefine the way we will interact with financial services going forward in future. So I'm very excited and happy to share and provide any other feedback input that any one of you would like to connect me with.
thank you, Saket. And if you send me the presentation, I can also link it from the wiki page. That's one thing. The second is, of course, this talk is now available on YouTube, and I've already put out the link. And actually, it's thanks to Daniela and Karen for managing that. And once again, thank you for
Thank you, Vipin. Thanks for the opportunity and great interacting with you guys. Thanks.
Thank you, Saket. It was a really complete presentation of what's happening in the space. I really appreciate you sharing